Hey there, traders. I put up a spiritual video on the channel earlier on, and I just thought that maybe it's time I put a trading related video up as well. What do you guys reckon? All right, so by now, many of you should be very familiar with Forex trading. I've pretty much covered, technically speaking, everything that you need to know in the Forex trading series itself, plus that additional fundamentals video. There will be more fundamentals related videos this year. I think I want to take you guys through more in depth, similar to what happened with the technical one, more in depth with the fundamental ones. So they will come between now and say the middle of the year. In this video, what I wanted to touch upon uh, were like some sticking points that I think many of you traders have been having. I want to refocus your energies onto just specific segments of the market itself or segments of a particular day itself, and then I want to remind you of what you guys should really be looking at, right? First of all, I want you guys to note that trading is an art form, right? For pretty much all of you that have been in some way, shape, or form gainfully employed throughout your lives, you've done some sort of like vocational training. You've gone to university, you've gone to TAFE colleges, you've gone to have done apprenticeships, but you have gone through a period of learning before you could really master your art. And then in addition to that, it's an ongoing basis in which you're constantly refining your ability to deliver whatever it is that you guys do. Trading is no different. However, I want you to start to now respect both the markets and also yourself and whatever level of trading ability you're presently at, right? Now, let me break this down for you guys. If you are taking your trading entries on a 15-minute chart, right, then there are only about 96 opportunities in a 24-hour period where you can take an entry, right? Now, if we were to break the 24-hour day down into segments, we've got the Asian session, London session, New York session, right? With each session, the most imperative part of it is usually the first few hours of it. Why? Generally speaking, that's where the fundamental releases tend to happen. That's where any of the economic data that is going to come out comes out that gives us some idea of whether this economy is strengthening or weakening in relation to other economies around the world. Correct? So, if we were to say the bigger trends tend to happen during London, then what we can do is to say, okay, out of those 96 hours, how many of them, 96 15-minute candles, how many of them would be consumed in the Asian session, right? So if we were to say the Asian session starts off with Auckland, Sydney time would be about 7 a.m. and London opens for us at around 7 p.m. So it's a 12-hour period, right? I would say that we're looking at about 48 hours. Oh, sorry, keep confusing hours and candles. I would say it's about 48 candles out of the 96 that we don't matter to us anymore, right? And then out of that, we have another 48 candles that are left. So then if you paid attention to, well, London really is possibly the better time to be trading, and also New York if there's a trend, because that's when the market will come back to an EMA and then bounce back up or back down again, that we can possibly take another entry there. So London, when's the best time to be trading in London? The first 3 hours. All of the registered news releases will happen within the first 3 hours. That will give us an indication of the strength of the pound, correct? So, if we were to look at that, it's only about 12 candles within the first 3 hours that we need to pay attention to, right? And then with New York, the first couple of hours, I'd say, is imperative there. So that's an additional 8 candles. So overall, throughout your 24-hour day, you're really only paying attention to a total of about 20 15-minute candles. And the candles that come prior to that and after that, or during that, will give you an indication of whether or not there is a structure that is familiar to you. That's all we're doing. If you see a structure that's familiar, You want to look towards the left and confirm for yourself if there is a trend. Sorry, I almost dropped my water. If there is a trend there that you recognize. How do we do that? We're looking for, remember, Elliott wave structure. We're looking for bounces off our EMAs, in particular, big bounces off the EMA 200. We're looking at our Fibonacci to see if there's a corrective wave happening. Well, where is the market coming to? So we'll look at previous highs, previous lows, and then we pay attention to where the market during the Asian session has created a low or a high. Because usually, if the market's going to continue on with a trend within London, then chances are the market will pull back to that low or high in the Asian session. So, for example, here, if we were to say that this is where bouncing off our EMA 50, the market's created a low during the Asian session, it's come up, corrected, and then gone back up again. Now, with London Open, we're looking to see what the market tends to do here, right? So it comes down. We've got candlestick structure jumping back up again. Here's our confirmation candle. Now, what we have to decide upon beyond that, fundamentals, we look at the currency pair. We wonder if there is fundamental strength within that currency pair. Is there any registered news releases that is going to help us? Now, we look at the London session and we look at this one and say both of those economies are actually shut right now, right? Aussie market's closed, the US is closed, US doesn't open until then. Plus, yesterday was a holiday in the United States. So the question then becomes, well, is this market got enough oomph to follow through, right? Probably not. That's what your train of thought needs to be, right? Me personally don't trade the Aussie dollar, and that's simply just because of it just doesn't move quick enough for me, right? So I use it as a means to find confluence for the pairs that I do trade, right? Next step. Remember, once we have broken down those segments and said there's only 12 or 8 candles that we're looking at that will give us an indication of whether we can take an entry or not. Beyond that, focus on everything that is familiar. All of the courses that you do, all of the videos that you watch, all of the books that you read, it's teaching you just one thing: to become as familiar as you possibly can with market structures. Once you have that, then you wait until the market behaves or creates a structure that you recognize and everything else just kind of falls into place. If that is there combined with your gut feeling, go for it. That's your entry. Now, in the last few months, possibly even the last 6 months, there have been a lot of unregistered fundamentals that have caused all sorts of havoc in the markets. For many people, that's burnout. That's usually where traders or new traders go to die. And the reason for that is that new traders have it in their head that the market is going to continue behaving in a certain way all of the time. It doesn't, right? The market does have moments where it's going to behave in a manner that's very familiar to you. Those are the moments that we're waiting for. But always be aware, and this is where respect for the market and respect for yourself comes in. There's always going to be moments where this 5,000-pound gorilla, which we call the Forex market, is going to do its own thing. And it's going to have influences outside of ourselves and our sphere that's going to affect it in so many ways. So what am I talking about? We're talking about where US government policy right now, it's got no direction. There's absolutely no direction to it, and so the markets will largely exist in limbo. It doesn't know where to go. The other thing is that we are now coming off the back of a overly heated economy worldwide, purely based off quantitative easing, and then at the same time when President Trump gave big business a tax break at the absolute wrong time in the business cycle, right? So that's one issue. The other thing is with many of the big players within the markets, the trade wars has a significant impact upon it. And then we've got the issues with Brexit for the UK and Europe. So there's a lot going on in the back end that combined is having a negative influence on the market. So when you're looking at the market and you think, okay, technically speaking, this should be going in a specific direction, and it doesn't, right? There's your reason. Because look, the market at this stage has no clue as to where to go. Now, our favorite pair, remember the one we've been dating for a long time, pound USD, it's probably pissed off at us for the time being. That's why it's behaving in the manner in which it is. So if she's presently going out to date someone else, at some point she will realize that we are the absolute love of her life, and she's going to come back again, right? So when we're looking at pound USD, there have been so many moments that, or will be so many moments when you're looking at it and you see fundamental reasons, like registered fundamental reasons, as to why the market should be moving in a particular direction, and it just doesn't, right? Like, for example, last week when there was the CPI release, and we know that the UK economy didn't grow, well, pretty much went backwards in growth compared to the previous quarter. Market really didn't react so much. In particular, it's, I think, beyond having factored that in, the market's still just in a limbo saying, screw the negative CPI growth at this stage. We're looking forward to a no deal Brexit, and no one has a clue as to how that's going to impact on not only the UK economy, but also the currency overall. So that's a bigger issue. And so when the economy is confused and all the major players within the market is confused, then you're going to find that the currency pair is going to be very confused as well. And here's where you don't get cocky. This is why I keep referring to the market as a 5,000 pound gorilla, because your cockiness would be, hey, screw all of that. I know what I'm doing here, and so I'm going to take an entry. And then you find where the market just, for whatever reason, decides to backfire on you, and you're wondering, why did you get shorted out, right? So a couple of ways to counter this is to slow down in the number of trades that you're doing, especially when the market's rough, especially in these sorts of conditions where, for example, when we're looking at this, right? Say, for instance, you trade the New York session. When we're looking at this and then you see a bounce off happening off the EMA 50 in the New York session, and you're thinking, hey, yep, this is definitely going to continue going up because that's one of the strategies we have, right? So we take an entry here, and then the market comes back down. You wonder, what happened? Well, the simple answer to that is, when you're seeing the market do something, or even here, when we're saying, hey, fantastic, the market's broken the EMA 50, this just retested the EMA 50, let's take this trade going down. Now, after the fact, we're looking at it thinking, yep, this would have been a nice trade. No, it wouldn't have been. Because at that point here, looking at all of this, you have zero guarantee that this market is going to continue coming south, right? When we're looking at these EMAs, definitely we've got something that we're seeing. But it's not enough for you to be able to put 10 lots, 25 lots, even 100 lots onto that trade. What I want you guys to do, it doesn't matter if you're trading micro lots or mini lots or standard lots, in your head, in the back of your mind, I want you guys to have this focus, this, for the present moment, like an unrealized result that is the ultimate aim when it comes to you trading Forex. And that is that every trade you take, in your mind at least, you're putting down 100 lots onto that. If it's not a setup where you are almost certain that you could put 100 lots onto it, don't take that trade. I don't want to do all this risk reward stuff. Maybe you guys are different, and because we're all different people and we're all going to trade in different ways. Me personally, the approach that I want to take with you guys when I'm teaching you these things is that you want to be able to rely on your analysis to a point where you can pretty much guarantee it. If you're going to do the risk reward system, what you're going to find is that you're more accustomed to taking risks. And in a market where, when it can get rough, when it's confused, when it's bouncing all over the place, that market will eat you up alive. So in that regard, just don't do it. When you see really nice setups and you've got the confidence, you've done your analysis, and you're able to put more lots onto that, then what you're going to find is that you're doing lesser trades, that you're making a lot more money with those lesser trades, and also that you've ironed out the markets. Like the market can do whatever the hell it wants, but it doesn't entice you. Okay, so just keep that in mind. Remember, I said cut back on the number of pips, cut back on the number of trades that you take when the markets are rough. We've got so much happening. The roughness will possibly continue again until the end of March and beyond, depending on what happens with Brexit, depending on what President Trump ends up doing with the wall. There is no real political stability across the globe. We've got elections happening in many countries as well. Here in Australia, we've got a state election next month, and I think our federal election is in May of this year. So again, around these times, there is instability. We've got some major policies, including the boat people issue, that may come into play when, if, say, for instance, the Labour Party will win. So all of that will have a significant impact on the economy, because when the boats start arriving, that costs us a hell of a lot of money. We're talking like $30-40 billion since, what was it, 2007 till now. About $30 to $40 billion has been spent just on that one issue. So when you start to look at all of that, that has an impact on the economies overall. Be mindful of what's going on with trade talks between the United States and China right now, because that has an impact on the Aussie dollar as well as on those individual currencies. So it's just you want to be able to see the overall picture and just be mindful of the fact that so many different external influences impact on that 15-minute or 30-minute or 1 hour entry that you tend to take. Okay. I want you guys to start becoming more and more familiar with fundamentals. So there's a number of you that have told me in the private sessions we've done that you absolutely hate reading the news. You don't have to love it. I just want you guys to be able to jump onto Forex Factory and the like. Just look at the news section, just see the titles that are there. It does help to know if there is an upcoming vote in the UK Parliament in regards to Brexit. It does help to know if there's a State of the Union coming with the US. It does help to know if there's going to be anyone from a central bank at any point in time who's going to have a conversation. And you'll know, just like going off last week, for example. Where was it? Where our central bankers tend to give speeches, right? They love giving speeches. And when they do, all of a sudden, these sorts of behaviors will happen in the market, because they'll say something. They'll say something along the lines of, there is downside risk, so we are thinking about just keeping interest rates steady, or there is the possibility of us lowering interest rates going into 2020 or whatever it may be. That is an indication for us straight away that what they're seeing is a weakening of the economy. And as a result of that, they will need to step back in to try and boost the economy. Beyond that, having a bit of an understanding of how the business cycle tends to work. That's very, very important. I know I've covered that in some of my videos previously. Beyond that, also going into 2019 and 2020, when we are expectant of some sort of a decline, I think more in 2020 than now, just going off what the central bankers have been saying. Understand the sort of crisis that can happen. So this is a debt crisis. Unprecedented in terms of the size. There is absolutely, at this stage, no real world solution to this problem. So we don't know how the central banks will respond. We don't know how the governments will respond. And so what I'm trying to do is do a hell of a lot of research in regards to this area to see what the possible opportunities might be, right? Remember, for us, as we're trading Forex, and for those of you that are also trading equities with me, the thing is that we've got the opportunity to go both ways, right? So we've got ability to short the market as well. And so in a lot of ways, there's going to be so many opportunities for us to be able to make money. You need to be prepared for that. And that's exactly what I'm doing. So the good news is you possibly do have, going in towards the end of the year, I think now this is going to be in 2020, when the downside happens. But certainly, prepare for it and make money in the meantime, because then you'd have an opportunity to put more lots onto those trades when we do start taking them. Okay. Um, the other thing that's very, very important, people that have approached me with their setups, some of you are taking trades away from your EMAs. Please don't do that. You want to always look for opportunities at your EMA 50 or your EMA 200, always, right? Don't ever like jump in somewhere in the middle, simply because, say, 60% of the time that may work, but there's going to be a good 40% of those times where it will burn you. It will go against you. Remember, focus is on setups where you're able to easily, without even flinching, put 100 lots onto that trade. That's the eventual goal that I want you guys to be working towards. Because the more time you spend in the market, the more chance you have of getting burned, right? Never take on the damn market. It's going to eat you up alive. Next thing, all right, this is very, very important. Structures, right? You guys are familiar with trends. You guys are familiar with Elliott wave structures. You guys are familiar with how to use Fibonacci. You guys are familiar with the different patterns, that the market structures that exist, the candlestick patterns, confirmation candles, all of that stuff we've already covered. You need to be able to remind yourself that at least on a weekly basis, you need to do your top-down analysis with the pairs that you most likely trade, right? So for me, the pound pairs. Now, here's what I want to show you, right? Let's go to last week. This was Thursday and Friday of last week. This is Thursday here. This is Friday, right? Now, when we see these lines drawn in, so market comes down, it's bounced off our EMA 50, it's come down, consolidated, gone back up. We got a nice wick to the high. Markets come down, and another strong green candle up. It's hit our line here again, and then come back down again, right? So any normal person at this stage would say, hey, that's a double top formation happening at our EMA 50, and we've got some sort of a line here. Let's short the crap out of this. Correct? Now, here's where, now I'm going to admit, when it comes to trading, after having done it for so many years, I've become lazy. And this is where the higher time frame structures that I draw in really does come in handy. So I'll look at this line and I'll wonder what the hell that is, because it must have been like weeks or months ago when I put that in. So I'll jump onto the higher time frames, right? And instantly I recognize that I've got a downward channel happening here. I had put this in towards the end of 2018, all right? So we've got a channel. Remember what happens with the downward channel? We're expecting it to break to the high. So in these instances here, we wouldn't just take a trade and say, hey, we'll let this keep going south. We expect it to break to the high. And even with this one here, see how the market bounces down? That's a strong, aggressive confirmation candle for shorting the market. But what happens? Market goes back up again. Again, downward channel. What are we expecting? So what are the two things that tend to happen when our structures get broken, or even our EMAs get broken? One is we expect a retest back to the structure, and two is we'll get a structure. First one, retest back to the structure in the next candle. Like so, in this instance, this market broke, and this was the retest to this structure in the next candle. And the other one is where there's a structural retest. So this is where Thursday and Friday happened of last week, right? So that line that you see here, this line here, when we go back to our higher time frame structure, that's that line there. So when price is hitting that, and we're going back onto a 15-minute chart to wonder if price is going to continue going south, well, that down channel, this line here, will be the first thing that I look at and say, okay, I can't short this market now because I've got no idea at this stage if it's going to do something absolutely different to what I expect, or where this market's going to go up. Now, just what I just said there, for those of you that are familiar with trading, would have understood what I'm trying to get at. The first thing is this. Remember in the past videos I've mentioned that the best way to trade is where both structure, technical analysis, and fundamental analysis are aligned. In this case, when we're looking at pound USD and we're looking at all the crap that the pound is kind of going through right now, we understand that the pound should be weak. So we're looking at this structure here, market coming down, and we're looking at this structure here. We've got every reason to say that the pound should weaken and should continue going south, right? But technically speaking, when we're looking at it from a higher time frame, overall, we've got this weakening of the pound happening here, but this structure here doesn't say to me that Shiva, you should put 100 lots down onto this trade and continue going south, right? So remember, I'm getting two different stories here, and for that reason, I'd be wary. Remember, guys, you're not going to be making a fortune through trading by the trades you take. You'll be making money from trading by the trades you don't take. And what I mean by that is, if you jump onto every setup, chances are you're going to start losing money because you're missing some information. But if you wait for those trades where everything is aligned, you're going to be making good steady money out of it, good steady income out of it. What else do I have? Trends, trade on trends, very, very important. People are trading anywhere. I've seen that so many times, and one of the first things that I will ask when someone sends me a screenshot or we're doing a Skype session is that, okay, here's where have your setups been? And when they show me a setup, the first question I'll ask is, show me the trend. Where do you see the trend happening? What are your reasonings for it? Look towards the left. Where has the market come from? Has it bounced off an EMA 200? Is there a clear multi-session structure happening, also multi-session, possibly even multi-day structure happening at a key area like 618, 382 on a fib, or even clearly on the EMA 200 or something along those lines? If you have that and the present setup has a relationship between where it is now and previous movement, then you possibly have a potential setup. Alright guys, so I'm not going to make this video any longer than what it is, so I want you guys to focus upon what I've said, go back and refine what your approach to trading is, and then redefine, I suppose, your criteria, reasons to take the trade, reasons not to take the trade, and fundamentals right now that are both registered and not registered that's having an impact on the market. Alright guys, that's it for now.